What happened in 9th GST Council meeting? There are 4 important announcements made by Honorable Finance Minister that April 1, 2017 is now going to be 1st July 2017. If you have attended our first knowledge series, we started sometime in October 2016, and second knowledge series, which was done recently in November, we have categorically said that to us looks like 1st April would be aggressive target. 1st July was looking very effective, and that is what being announced. So clarity provided before the budget day, 1st of February 2017. And looks like to me, they will come out with a clarity in terms of timeline for GST implementation would be 1st July 2017. Second parameter of joint empowerment. Where state is fighting with the center and they are demanding that trader on any SSE having turnover less than 1.5 crore should have exclusive power with the states. In that regard, it has been decided in the ratio of 10:90. 10% will go to central government and 90% will go to state government. Beyond 1.5 crore, 50-50, and it would be done by way of computer programming. That is what being stated. But important aspect would be beyond 1.5 crore, we got levy of CGST, central government, SGST, state government, but IGST exclusively levy of central government. How it can be adjudicated by state government? And even Ministry of Law has commented that state cannot adjudicate the subject matter of central levy. But what is being stated yesterday, there would be appropriate amendment in the GST law, and state would be given power to adjudicate even the IGST subject matter. Let's wait and watch. Third important aspect, which was stated to be 12 nautical miles up to the custom territory of India. It is a central adjudication, central power, but states were disputing and they wanted to levy even on high sea sail. It is being stated that it will continue to be under central administration, but any economic activities is being carried out within 12 nautical miles from territorial water, state can charge the taxes. So there would be appropriate amendment in that regard. But last and important, there's no announcement made because GST Council has not approved IGST law. CGST and IGST has to pass either as money bill or finance bill. In all probability, it looks like money bill. And it need to come in the budget session only. In the last meeting, 8th meeting, they have concluded CGST and SGST, but IGST, GST Council has not run through. And the next date, which is proposed for GST Council meeting, is 18th of February. Now, even 1st July date, if the CGST and IGST is not passed in this budget session, which is starting from 31st of January, then again looks like to me 1st July getting aggressive. And 18th of February, they are going to sit down once again. That is after budget is being announced. So looks like very tough to me as well. But nevertheless, maybe on 18th of February, they can conclude this IGST provision, IGST law, and when this parliament reconvene after the break in the first phase of budget session, maybe during that time period, CGST and IGST may be passed by the parliament. This is about the recent outcome on GST Council meeting, 9th meeting, which was done yesterday. Now, taking today's subject matter, input tax credit, I'm going to highlight only 5 subject matter for all of us together to start thinking and blinking to our mind why input tax credit is important in GST provision. Today, if you look at Standard Credit Rules 2004, we are struggling with seamless flow of credit. We are struggling a lot. And in GST, we all are looking that we will get seamless flow of credit. That is what we all are expecting, right? Whether we get or we are not getting it, time will say, but whatever provision existing today under revised model GST law, we are going to discuss today. So first laudable one, which I can highlight today, the kind of definition provided for input services and capital goods is a laudable one. And there is a change in definition if you look at first model GST law to revised model GST law. Initially, it was stated input and input services to be used for outward supply, meaning was restrictive. But now they are saying any input and input services used or intended to be used in the course or furtherance of business. So broader perspective has come for availing credit. First part. Second important part, credit is available 100% provided it is not falling into negative list. Capital goods credit 50% in the year of purchase, 50% in subsequent year, right? This provision is not there in revised model GST law. Even capital goods credit, 100% credit available except 2 items. Pipeline and telecommunication tower, where credit is available 1/3, 1/3, 1/3. That is what the provision. But the point which I wanted to draw your attention, and I want you should start thinking, and I would be looking from all the faculty to deliberate. The first important would be whether we are getting seamless flow of credit or not. Product which is kept out of GST, alcoholic liquor for human consumption, 5 specified petroleum product, petrol, diesel, petroleum crude, natural gas, aviation turbine fuel, and power sector, entry 53, list 2 item. To that extent, cascading will be there, but I'm saying if my output is taxable to GST, can I avail credit, 100% credit? That is the question I posted. Even in GST provision, we are finding negative list. Negative list for motor vehicle. Motor vehicle, if it is used for trading purpose, transportation of goods, transportation of passengers, and training. But just imagine you're a company. I'm a chartered accountant. I bought a car. I paid GST. And car I'm going to use for the provision of taxable output services. But credit is not available to me. I'm getting this office constructed for the provision of taxable output services. Still, I can't take credit of GST paid to a contractor. The same legacy is being continued in GST provision. Why? These are the million-dollar question. Employee-related services for the company. They say rent a cab, life, and health insurance, provided it is statutorily required. Then only credit available, otherwise not. So again, we are restricting the meaning, first part. Second part, time limit to avail credit. Today we got 1 year time limit to avail credit, right? Are we continuing with the same provision? They are restricting even time limit. We have to avail credit by due date of September return, which is 20th October, or due date of annual return, which is 31st December, whichever age. So I do not understand what is, and then just imagine a situation, you have not availed credit for any XYZ region, maybe interpretation. Your time limit is being prescribed, but recovery of taxes, recovery of GST, even in non-fraud cases, would be 3 years from the due date of annual return. You end up paying taxes, output taxes, but corresponding credit is then restricted till the time limit prescribed. Just think of a situation, business perspective, which is not going fine, not tuning together. Second component. Third component. When I say no seamless flow of credit, time limit prescribed, what are the bottleneck in GST Input Tax Credit? Important one, ITC matching and mismatching. Big issue. Supplier raising invoice, that would be auto-populated for the recipient, right? But if supplier makes the mistake, how these credit would be matched? And what happens if you pay the taxes to a supplier and supplier does not deposit? Credit is being denied in the hands of recipient. But importantly, we should start now thinking that, because these provisions are very important.